All right. All right. So we live. So what we're doing is some back testing basically for the last 2 weeks, right? Using ICT concepts, right? Back testing for the last 2 weeks using ICT concepts, right? So if you're on YouTube, I mean, if you're on Instagram, if you're on TikTok, you will have to go to YouTube to see what I'm actually doing, right? Let me pin it. Let me pin that into the chat on TikTok and I'm live on YouTube at Casino. If you want to see my chart, I'm live on YouTube. Pin comment. All right. So I'm live on YouTube. Okay. For some reason on TikTok I can't type it in. But if you're on TikTok listening right now, you gotta go on YouTube. You gotta go to YouTube to Casino Trades to see what I'm actually doing. All right. So let's get started now. All right. So this is Mondays right here, right? This is Monday last week of the 10th, right? This was the 10th, Monday the 10th. So market liquidity. So first thing we got sell side here, and we have sell side here, and we have buy side up here. Now, same thing. You want to see it sweep one end, right, and then you want to see it go to the other end. And this is strictly just order flow, right? So market liquidity opens. We do not retrace to this fair value gap. Actually, we did. So it's something that's called an institutional order flow entry drill, right? An institutional order flow entry drill is basically where it leaves a fair value gap. It leaves an entry, right? It leaves a fair value gap. So you touches it literally for only one tick, right? Touches it a tiny bit, right? So that's an institutional order flow entry drill right here, right? So we create this fair value gap here. It comes into it a tiny bit, expands away, right? Creating a what? An order block. Remember, an order block, right, is a down closed candle, right? A bullish order block. A bullish order block is any bearish candle, right? A bullish order block is any bearish candle that has a aggressive displacement after that, which is right here. So this is, and then remember, the most sensitive part of the order blocks is from the opening price to the top wick. That's why you see, if you see on my videos sometimes, you'll see me notate it'll be like OB's wick, because that's the most sensitive part. So now you see how it creates the order block and rallies away. Then you see how it comes back into the other order block here and rallies away again. So mind you, there's no real trade short, right? You want to be patient. There's no real great entry. So just be patient, right? It already swept that buy side. So now you're just waiting on bearish order flow. So now it comes up, we take this high, we come back down. We are still respecting this order block right here. So let's break this down right here. Right here. So we have this down close candle here, and you see how it closes here, comes down and rallies above, right? So we're still respecting this order block as right here. So we come up, we touch it. That's why you want to be patient. That's why in trading, it's a patience man's game, right? But it's a poor man's gamble. So if you're literally trying to make money, constantly trying to make money, and your mind is strictly fixated on trying to make money, you can blow your account, right? That's why it's about less trades, right? Better quality trades. You want to take better quality trades. So anyway, it's still respecting it, right? It's still respecting. Now we finally break below. Let's delete this. So we create a high, So we have a high, low, higher high, sweeping out this high. Then we create what? A lower low. That's a bearish breaker, right? A bearish breaker, just like a bullish breaker. And it's a right. So we have high, low, higher high. Once it closes below this lower low right here, that's the breaker. So just like a bullish breaker, which will be low high, lower low, higher high, it's your last but bearish candle, which was right here. This whole thing right here. This is your bearish breaker. And as you see, it just displaces low. But see what happens, right? We don't really get a retest. This is why I didn't take this play right here, because I didn't get a retest back to it. But I'm realizing is that when you don't get a retest back into certain zones, right? Because you see how it closed here below, right? It never came back up to touch it, to displace lower. That happened to me. So when that happens, sometimes, like I said, you still want to be patient. You're waiting on a you're waiting on a retracement back into it, but you see how we never get it, right? So it displaces lower. Cool. No entry. You don't want to try to anticipate and just try to like, no, because you'll get burnt majority of the times. You want to wait on another entry. So we have another, once it breaks below here, so we have another breaker. We have a high, same thing, high, low, higher high. Once we close below this lower low, same thing. Bam. That's your bearish breaker once again. So remember, it's the last bullish bearish candle. So they extend it. So that's why I like ICT concept, because with ICT concepts, it could allow you to still be late on the play, but still allow you to get in, right? It's just, you have to understand where are the entries. So you see how right here we use this fair value gap to go higher. Anything that gets used bullish is going to get used bearish in a sense also. So you see how we never get a touch back into any of these fair value gaps right here, right? But you see right here, this is where the entry. But now the problem with this entry is that we're already close to the target, which would be here. So you see how it closed here, and then it came back up and retested. You see how it came into this bearish fair value gap here, and then it dropped lower, right? So that would have been the only entry that you could have got. Went short here, stop loss at the top of this SIBI because you're not expecting it to come back up there, targeting the lows. As you see here, it still dropped. See how it came back? You got your entry here, drop. We got an order block here. Remember, this bullish candle displacing lower, coupled with the fair value gap, is a high probability order block. Remember, the most sensitive part of the order block is from where? Remember, the opening price to the low wick. If you extend that through, look how perfectly it touched it. Boop. Displacing lower, sweeping out the low, these lows. And then if you ain't get into any of those plays, it's going to always present you multiple. It's like usually it's going to present you multiple entries. Bullish and long. So let's say you ain't take none of this going short. Cool, because it was kind of like iffy because it never gave no real retest, right? It never gave no real retest. The only retest was here, dropping lower. That's more of an advanced level, right? But let's say you ain't catch that play. Cool. We got a sweep. Remember, no sweep, no trade when you're trading ICT concepts. We have a sweep here, right? If you want to see it go lower, you want to see it expand. You want to see it expand past the lows, right? It never expanded. It swept and came right back up and started consolidating. And now what we get a bearish breaker. We get a low, high, lower low, sweeps it out this low and the higher time frame low. And then once we close above here, we get a higher high here. So now let's break this down. Remember, same thing like the bearish breaker, the bullish breaker. It's your last bullish candle. Look how perfectly. It actually gave you 2 entries. So you see how we closed above the high right here, right? Then you see how it came down. You see how it came down and it just rallied above. That could have been your first entry, stop loss right below this fair value gap here because you're not expecting it to even come down there. So, right, it takes out this high, it comes back lower, back to the bullish breaker. Now, if you're bearish, it's going to literally disrespect this bear. It's going to disrespect this shit, right? Look how the bodies is staying in the upper half, right? Look at the wicks. The wicks are in here, but look at the bodies. The bodies are up here, letting us know that, you know what, it's time to go higher. Then after that, create a change in the state right here. Look how it comes into the change in the state, respects it, and rallies away. So if you didn't get your entry here, you could have waited for it to pull back. This is probably a 5-minute fair value gap also that's coupled in here also. Could have got your long right as it came into it. You see how it's leaving it? You could have been patient. Okay, it's leaving it. I'm going to get in here. Stop loss below the breaker. Look at that. It ran all the way back up to the highs. It ran all the way. So you see how you could have caught it this short down here because up unless you could have been anticipating it, you could have just jumped in and shot from up here. But I don't really like to anticipate. I like for it to retest the levels, right? It never retested it. This was the only retest of this bearish fair value gap right here. And you see how we use this to go higher. So once it get below here, I'm expecting to use it as a breaker. I mean, as a inverse fair value gap. Stop loss above. Look how it comes back. Order block respects the opening wick, drops lower. If you didn't catch that, you could have caught this one. We got a breaker, low, high, lower, low, higher, high, came back, ran. Now, that was what? Monday, right? That was Monday, the 10th, 2 weeks ago. Now, this is Tuesday. Let's delete everything. This was Tuesday. What we get? You always want to try out the highs. We have some highs here. This day, we had a lot of chop kind of in a little bit. So you see how it's up at the highs. And it kind of just gave a lot of chop all the way to the low. But it's still displaced. But look what happens. Once we sweep, look what we get. We swept, we don't sweep out the low and keeps going down. We sweep and come back higher. That's how you know if that's how you know that it's not ready to keep going lower. From either direction, from the higher to the low, if it sweeps it, like if it takes out the low and then it don't keep on going lower or higher, that means it's time for a reversal. That's why ICT concepts, majority of all the plays are reversals, right? We do catch a lot of continuations, but majority of the plays be reversals. So it sweeps out here. Then what happened? We consolidate. That's why you want to be patient. And then look what happened. This is 12 o'clock. Even though the play ran at a time you're not supposed to be trading, it still ran. So we get a consolidation. Consolidation. We finally displace. Once we displace higher, look what we do. We create a fair value gap. And look what we do. Respect it and just keep going higher. So we get a consolidation. It manipulates lower, sweeping out this low right here. This place is high. Then we get bullish order flow. Remember, bullish order flow, you want to see it respect the upper. If you want to make sure, if you want to make sure you're on the right side of order flow, just draw multiple fair value gaps, right? And see if it respects it. The key is knowing which fair value gap. The thing is that the best fair value gaps comes after a sweep, right? So look how it stays in the upper half, right? Look at the bodies. All the bodies are in the upper half, right? Look how it leaves it, comes right back. It's staying in the upper half. And then that's how you know. That's how you really know. That's why I be saying, okay, I'm looking for bullish order flow or bearish order flow. You want to see it stay in the upper half of PD arrays. Like once I learned RCD concepts, like I swear, everything literally just got so much easier, right? But it's literally about mastering your strategy. You have to find what strategy actually works for you. Like you have to try out all the strategies, try them all out, right? Whichever one that works for you, and whichever the one that's really not working a lot, just start taking those out. Like, I ain't doing that one no more. I'm gonna just focus on these. That's the goal. Or what you can do, which is what I did, you find you a mentor, right? You find you somebody that you really like the way they trade, right? You really like the way they trade, but most importantly, they have to be transparent. If they're not transparent, which means they're probably gonna be lying to you behind closed doors, right? Telling you certain things work and it really don't work. But you have to find somebody who really know how to trade a proper way, and you like the way they trade. Once you like the way they trade, you find out their strategy. Once you find out their strategy, bro, you just do that strategy and just trade it the same way. And you have to keep learning because it may not be working for you right now because of the type of order flow we're in. That's why you have to learn the other key things when it comes to trading, right? Like low resistance versus high resistance. Basically knowing when to trade and when not to trade. That's the key. How do you know when to trade and when not to trade? It's when it's trading in a range, right? So let's say we have a zone here and then we have a zone here, right? And then remember, we already know about fair value gaps, right? So let's say it's in between this range, right? It's no point of taking trades outside of the range because why? You're anticipating, expecting it to break out and to it's something that's called low resistance and high resistance. And then let's say we have fair value gaps in this thing over here. We have fair value gaps. But then remember, you see it's not respecting none of the fair value gaps. Like we all can clearly see when fair value gaps are holding and when fair value gaps are not holding. When you see fair value gaps not holding and it's literally just going back and forth, it's trading in a range. It's not going to do what you're expecting it to do. It's not time to trade. Lunchtime is a time usually is when not to trade. You want to trade when it's doing this. This is when you want to trade. When you see fair value gaps working, all right, you see it pull back to a fair value gap and it takes it higher. And you see it pull back to another fair value gap, takes it higher. Pull back to another fair value gap, takes it higher. And then the key, you want to see it stay in the upper half of fair value gaps. That's majority of the key. When you're watching bullish order flow, there's two parts of the fair value gap or any PD rate, which is a breaker block or order block, any inefficiency, any of them, any PD array. You want to see it stay in the upper half. There's always two parts of the fair value gap. There's a upper half and then there's a lower half, right? The upper half is the upper half and it's the lower half. If you see it disrespecting it, if you see it, which means it's coming into the lower and it's doing this in the fair value gap, this is a fair value gap you do not want to take. You don't want to take a play in this fair value gap. Why? Because it's disrespecting it. It's not respecting bullish order flows. And if it's disrespecting it here, you want to just wait and be patient. And you want to see if it respects it in this fair value gap, right? Whenever it has a fair value gap, right? That's why, honestly, trading is, bro, it's one of the hardest thing. It's one of so they go to the next day. It's one of the hardest things you're ever gonna have to learn how to do. You know why? Because you're trying to master your emotions and master the charts and all of this thing. That's why you have to constantly be getting better. That's the key in trading. Constantly getting better, constantly studying. Hold on. Like it's a that's why you have to find you a mentor, bro. Like I'm trying to tell you, you don't have to pay for someone, but you just have to find you somebody who you can learn from and just adapt their strategy, right? Because if you just learn on your own, you're gonna be everywhere. And if rules, you have to have certain rules. So, anyways, let's go back to the thing. With all of the entries, the breaker blocks, the order blocks, the fair value gaps, the inverse fair value gaps, they're all gonna have the same type of movement to it. It's gonna respect the upper half or lower half. That's why I be going back testing because I be like, damn. But you have to know what you're looking for. You have to start off on a daily, right? So you have to start off on a daily. That's how you start. That's how you understand what's going on. Because if you don't start off on a daily, you're not going to know the real clear direction. You have to know the direction. The same order blocks, breaker blocks, fair value gaps we look that I use on a lower time frame is the same ones I use on a higher time frame, right? The same one I'll be using on a higher time frame. So I come on a higher frame, find me an order block, find me a breaker block, find me whatever I'm looking for, and then I go to a lower time frame, right? Once I go to a lower time frame, oh, and a new week or a new day opening gap. So those are the main things. I go to a higher time frame and I look for a new week opening gap or a new day opening gap. Those are the first two, and then I'm looking for a buy side or sell side. Then I'm looking to see if it created an order block or if it created a breaker block or a fair value gap on a higher time frame because higher time frame matters first. That's the direction. Then you go to a lower time frame, and then I'm trying my opening prices, which is my 8:30 open, 8:30 open, midnight open. Those are the two. 8:30 open, midnight open. And now I'm looking at, okay, where are there equal lows or equal highs at? That's key. Where are there? Like, because in order for it to go higher, it's going to go lower. So look, it wanted to go up here. It really want to go up here because why? We have multiple buy side zones up here. But before it goes up, it has to fake you out. It's just not going to let you just ride the wave to the top. It's just not going to do that. It has to manipulate you. So if you don't know what you're really looking for, it's going to manipulate you. So look how we end up sweeping out the low. And then we go higher. And then before we really, really go higher, just in case people know what they're really doing, it's going to mess you up in this little chop here first. And then it's going to go higher. That's why you have to really understand what you're looking for. If you want to go higher, it's going to go lower first. Understand that there's 4 reasons why the market moves. It generates the highs and lows. Then it's going to hunt the highs and lows. Then it's going to pull back to equilibrium, and then it's going to pull back to inefficiency of the range. That's the 4 reasons why the market moves. In that little circle, it's saying that's called an AMD model because it has to fake you out, right? It's going to give you, it's going to accumulate, which is going to go back and forth in a range. It's going to go back and forth in a range, right? Generating highs and lows. Then it's going to manipulate. It do it on a higher time frame and a lower time frame. Then it's going to manipulate lower, right? Faking you out. And then it's going to start rallying. This is where I take my plays. I take my plays in here, which is the distribution leg, because that's how you can get a more bang for your buck. When I see it generating, I already know what it's doing. It's waiting on market open, right? It's just waiting on market open. You see what I'm saying? Like this week's order flow, damn, I ended up deleting. I ended up pressing. Let me see if I could just get it all back. I deleted all the damn price action that I just charted. that I really wanted to show y'all. That was probably ain't gonna do it again. But anyways, I'm done already. I just want to come on here and give y'all some game, man, because I'd be bored. I'd be bored and I'd be like, damn, man, I came so far. Like, I came so far. And it's crazy because you still gotta I still gotta study. I still gotta learn. I still gotta get better. Like, that's the only way you actually get better at trading. Is if you constantly just get better and better and better and better and better. Because the difference between a professional and an amateur. This is why I study so much, and I study and I implement it so much because an amateur is going to practice until he gets it right. Oh, I got the fair value cap. Oh, I know the breaker block. Oh, I understand. Okay, a sweep. Like, okay, I get it. And then you just practice until you get it right. A professional practice until they can't get it wrong. Like, bro, I've been doing the most winning I've ever been doing in my life. That shit is so crazy. Like, I'm literally getting used to winning now. Like, not now, but like the last maybe like 4 or 5 months. Bro, I've been doing way more winning than losing. The only problem is the losers be big. That's the problem. Your losers, you need your losers to be small, right? You need your losers to be small. That's how you do it. Because you're going to lose in this game. You're going to lose in this game. The key is to make your losers small and your winners big. The way you do that is by understanding risk management, knowing when to trade, when not to trade, having rules. See what I'm saying? He said, bro, I'm tired of Forex. It's a toxic. So switch. Don't trade for it. Trade, you could trade NQ, you could trade gold. It's so one thing about learning, once you learn price action, once you really learn price action, bro, you could trade any market. Like, I just like ICD concepts because ICD concepts is just better for me to understand. Like, it's rules and it's great risk to reward. You literally, and then it's like you're relying on yourself and the concepts. You're not relying on nothing else, no EMAs, nothing else. See what I'm saying? But you just gotta block out the noise because it's a now that ICD concept is kind of like getting big. A lot of people are gonna still drift towards it, but it's because it's a lot of young people and the young niggas is toxic. They're not toxic. They be trolling. They making a lot of. It's just trading is a serious. It's serious, bruh. It's not no joke. Like, it become a joke once you get successful because it gets easy. Like, because the same thing you do, the same thing you're doing, like the same thing you're doing. Because remember, the same way how you make $5 is the same way how you're gonna make $500. It's gonna be the same way how you're gonna make 5,000. Like, the concepts don't change. So I'm saying, so it becomes easier because you're taking the same plays all the time. If you once you become disciplined, once you master your strategy, you're not gonna be taking all these type of strategies. Like, everybody who really successful at trading, they have certain strategy that they trade. They don't trade everything, and they know when to trade, when not to trade. So it's toxic because this is a game where it's free. It's free. You can do whatever you want to do, and it's just about the best. The best trader wins. So it's like you gotta know how to block out the noise. That's why it takes 3 years to really become profitable. Not really three, but they say your first year you're just everywhere. Your second year is when you kind of like, okay, you kind of like zoom in and you really start learning for real. The third year is when you, okay, you know what, you kind of start, okay, breaking even, right? Okay, I'm not losing as much no more. I'm actually winning, but I'm still not profitable. So the third, fourth year is when you kind of like turn profitable because you realize, damn, I've been doing this for 2 years already, man. I gotta get serious. The problem is people don't get serious from the beginning. But you got to get serious, but it take time. It take time to become serious because he said I would switch to futures and pass. Yeah, bro. How long you been trading for? How long you been trading for? He said no clear movement all the time high. See, it's good to trade at all-time highs because when you trade at all-time highs, oh, you've been trading for 3 years? Oh shit. I'm thinking you a rookie. Cause that's what I'm coming up on my 3rd year. I'm actually coming up on my 3rd year now. So I really ain't started 3 years. I literally started like I started changing my life. I'm going on my 3rd year of changing my life. So I started trading. I started trading like maybe like April of that year. So I just say 3 years because whatever. But my motto, shit, my motto is simple: sweep. So the motto is kind of like the motto is simple. Yeah, you have to know the higher time. You have to know the okay. You gotta know the draw first. Okay, if you're trying to go higher, so let's say there's double highs, right? Let's just make it clear cut. I got double highs, so we both know the target is higher. The bias is higher. Now remember, for it to go higher, it has to manipulate lower first, right? So I'm looking on the manipulation lower. So for it to go higher, it's gonna go lower. So if the bias is higher, I want to see this consolidate, right? Then I want to. So matter of fact, let me just show you. So let's say I wanna go here. This is the draw, right? And then we have a high. We have relative highs. Bomb. We have relative highs. Now I want to see it go lower into a higher time frame, maybe PDRA, sweeping out some lows, right? So it'd be like, okay, we sweep out these lows into a higher time frame PDRA, and then create bullish order flow to go higher. That's simple. It's simple, just like that. The problem is, it don't matter if this is a breaker block, order block, fair value gap. It don't really matter. So it's understanding where's the draw. They said the draw is higher. I'm looking for remember the AMD model is accumulation, manipulation. So on that manipulation lower, let's say it sweeps out more lows. It sweeps out the lows into a higher time frame PDRA, and then we get bullish order flow. It respects fair value gaps in the upper half. It respects. Then we may get a breaker or order block or inverse fair value gap also. That's the actual model that I trade. But it could be a breaker block. It could be an order block. It could be. I don't really care what PDRA forms in this learn because I know how to read order flow. Targeting here, and then from here, let's say I want to go higher. Let's say it's a bullish breaker in this zone here for me to go higher. So I catch a continuation to go higher also. So we know a bullish breaker is a low, high, lower, low, sweeping out this low right here into a higher time frame PDRA, and then it makes it higher, high, comes back into the highest point of the breaker, stays in the upper half, and rally. That's the model right there. But I can't be consistent with Forex with my bias. It's absolutely 100%, but with no movement. So switch. You've been trading for 3 years, nigga. You should have been looking at stocks and looking at everything. That's one thing I was doing. When I was losing, I was still watching everything. So I was doing stocks for a little bit, and then I was like, you know what? I'm gonna switch to futures because, man, I don't know. And because one of the mentors that I was looking at, they were trading futures. So I was like, you know what? Let me just switch to futures. And then that's when I got to ICT concepts. And it was just the best thing. And that the thing is that you gotta stick to certain concepts. You just gotta just stick to it, man. Like, that's the whole goal. So but look at this shit. Before the massive move, we get a sweep. The problem is people are trying to chase this move right here. We love to chase this move here. Got to be patient. Yeah, boy. Futures is a real market, and forex is capitalist environment. Yeah, man. You can still trade. See, the problem is you're still focusing. You're focused on the environment. Why you're focusing on the environment? You see what I'm saying? Like you gotta block out the noise. If what you're doing is working, who gives a fuck of the environment? Find you a broker that actually work and trade your shit. Now, if you need an environment or if you need to trade with people, then forex, then futures is better because it's a better. You can find so many traders and they got good, but it's not. It's about learning the concepts. You need to find you somebody that you want to trade like and adapt their concepts. Buy their damn. You don't gotta buy their course, but just jump into their Discord. It's gonna be from 50 to $150, and then you learn. And once you learn, you just block out the noise. So it took me like it took me like 5 months to kind of like learn the concepts, right? 5 to 6 months to learn the concepts. And then once I learned the concepts, I had to know how to apply it. Understanding, okay, when to trade, when not to trade. Am I looking for double highs, double lows? Understanding the AMD model, understanding all of those things, which fair value gap, which thing, all of those things, right? But you have to find you a mentor. You got to find you somebody that can expedite the process for you. So I found me somebody, right, that trade RST concepts, that I like the way they trade. So I just, okay, you know what, cool. I'm gonna go over there and learn learn how he trade, how he uses the concepts. Because remember, everything works. The problem is it's just not working for you. So you have to learn how to make it work for you have to learn how to make it work for yourself. So you have to adapt it. So anyways, I went over there, understand, okay, damn, this is how you save the money. You don't trade all the time. Now I'm like, damn, I just thought you could trade all the time. No, you don't trade all the time. Then I learned, okay, you gotta have rules. Oh, bam. How many trades you want to take, all of those things. Oh, okay, cool. Then you gotta understand, understanding like, okay, you can't trade, it's like no news Mondays, and then you can't trade during news, and then same thing is like, oh, he waits for a super liquidity first. I never knew about that. I'm just thinking you could just whatever. So now I'm waiting on a super liquidity. So now it took me like 7 months, 6 months to learn the concept, and then a whole nother 6 months, which was last year. I got into Buddy Discord last year, September-ish. So from April to September, I would learn the ICD concepts. Then from September all the way to now, that's when, well, from September all the way to like maybe let's just say April, that's when I was like, okay, bam, I got it. I literally know what to trade, when not to trade, but now I gotta make it work for me. So now I had to come up with my rules. The whole part that you want to have your prop firm. You don't want to be trading real money because bro, when you trade real money, bro, you're not gonna be able to get the psychological out of it. Then once you do make money, you're not gonna know when to stop, when not to, you know what I'm saying? So you need to learn how to do it on a prop firm first, or just do it with a little bit of money. Because the same way how you make a little bit of money is the same way how you make a lot of money. If you can't flip a little bit of money, bro, you're not gonna flip a lot of money. It's just you think because you got more money to trade with, you're gonna make more money. No, yes, you're gonna make more, but then you're gonna lose more because now your losers is gonna be a million times more. And oh my God, that's how people quit right there. That's how people quit right there. So I'm saying, so then I'm like, oh, okay, you got to be patient. You have to wait for it's something called a Judas swing, right? You have to wait for the manipulation to sweep. You got to wait for it to sweep the dumb traders out of the market. Now I'm like, oh shit, that's why it's smart money and dumb money. Now I'm like, oh shit, I gotta be patient. I gotta let the dumb money lose first. Then I started learning how to trade with the dumb money. Oh man, change the game. But anyways, then I'm like, oh, okay, you gotta understand the premium and discount. That would change the game too. Learning the premium and discount. Learning when you're in a premium, learning the best short positions is gonna come when you're in a premium. Your best buy positions is gonna come when you're in a discount. Perfect example. So if I'm in, this is the range I'm in. I understand. If the upper part, this is I'm in a premium. This is expensive up here. The lower half is a discount. So your best long positions is going to come when you're down here in a discount. Your best short position is going to come when you up here. You see what I'm saying? And then it just literally piecing it all together. How do you trade, bro, on NQ? Same way how you trade anything else. You find a higher time frame draw, like perfect example. This is how I trade NQ. I'm gonna delete everything and I'm gonna show you how I do it. I go to a higher time frame, which is a weekly. Bob, I'm at a weekly. Are we making higher highs? So that's the first thing. So I'm looking like, okay, we're still bullish because high, higher low, higher high. Now I'm like, damn, we made a lower low. But if you look at it, we didn't close below this low right here. So on a weekly time frame, we're still kind of bullish. We're just doing a crazy pullback, right? Because we didn't close below this low. We wicked it. So basically, like we actually swept this weekly low right here. So on a weekly chart, we're still bullish. But if we close below this low, then it's like, okay, probably gonna be bearish. But then I go to a daily. I see on a daily, we're actually, so we got a low, high, higher low, higher high, lower low, higher high. That's still bullish. But you see, we close below here. So it's like, okay, we're still like on a weekly. It's still kind of bullish, but we're switching the trend. Because now look what happened. On a daily, we're making lower highs. That's bearish. So until you make one of these higher highs on a daily, we're kind of bearish in a sense, because on a weekly, it's kind of like iffy. And then on a daily, it's showing it's kind of switching from bullish to bearish. Now that I know, okay, we may be switching from bullish to bearish because we was bearish for so long. Now I'm like, okay, you know what? Same concepts. Do we got a bearish? I'm looking for order blocks and breaker blocks on a higher time frame. Same thing like I do on a, so I see, so do we got a breaker block on a higher time frame? So we have a high, we have a low, we have a higher high. Did it close below this low? It damn sure did. So that's a bearish, that's a breaker. That's a bearish breaker on a daily chart. Let me draw it out again. We have a high here, we have a low, we have a higher high, lower low. So a breaker, the most sensitive part of the breaker is that last bearish candle, which will be here. So I want to see from here. So this is the bearish breaker right here on a daily. Bearish breaker. And what we get, we have an order block on a daily. We have this down close. We have, matter of fact, so we have this one bullish candle right here, right? This is a bullish candle. And you see how it closed below this low? That's a bearish order block. It don't have a fair value. Now remember, the difference between a high probability order block and a low probability order block is when it don't has a fair value gap. A high probability order block is going to be coupled with a fair value gap. So it's going to close below this low, and then it's going to leave a fair value gap. This one don't have a fair value gap, right? But let's see if it respects it. Remember, the most sensitive part of the order block is from the low wick, but it is an order block because why? It expanded lower and it closed below this low of the wick. So it's a bearish order block. It's just not a high probability one, but it's an order block. But you see how it's coupled with a bearish breaker. So that's a confluence that makes it more stronger. Now, what do we get? You see how the most sensitive part of the order block is from the low wick. The wick is here from the opening price. And you want to extend that through. And it looked like it respect the OB's wick. And remember, if you want to get the quadrants, on the order block, you go from the high to the low. Did it reach mean threshold of this order block? No, it didn't. Look at the 50% range. That's so if you don't know, mean threshold is just like equilibrium. It's literally just the 50% range of the order block. So the order block, so that's why I drew the fib from the high to the low wick of the order block. And that's how you get the range. That's the 4 quadrants. And you see, just like fair value gaps, just like any, you know what I'm saying? You want to get the quadrants, you want to look for the equilibrium. On the fair value gaps, equilibrium is the 50% range. On order blocks, for some reason, ICT calls it mean threshold. For some reason, he calls it mean threshold. And put you on another game, ICT call the wicks. So the same thing with the wicks. The wicks from here to the here, the 50% range is not called mean threshold, or it's not called equilibrium. It's called consequent encroachment. I don't know why. I don't know why ICT have all these goddamn words. Well, I don't know why the 50% range can't be the 50% range for every fucking thing. But it's just not. So the wicks 50% range is it's called consequent encroachment. If I'm saying it right. It's only for the wicks. And then the order blocks, the 50% range is called mean threshold. And then for fair value gaps or other PD arrays, the equilibrium for the 50% range is called equilibrium. But you see how it didn't have a willingness to come to the mean threshold of the order block. And look what happened. It displaced lower. Remember, bullish candles will open low. So this candlestick, same thing, like that's why you have to understand it's all mixed together. Candle, I think it's like called candle anatomy, right? Which is the way the candlestick works as it open. All candlesticks open, manipulate it like it does it in the candle, the AMD model. Look what happened. This candlestick open. Remember, bullish candlesticks open low. So look, it opened low, right? Went up, then it went all the way down, and then it closed here, below the low. So it actually respected it. And remember, if it displaces lower, this is a order block, and if it creates another order block down here, that's an order block that trades into another order block, which is called a propulsion block. And now we're looking to see speed. So now that's 3 higher time frame PD arrays. That's all making us go lower. And this is all on a daily chart, right? This is all on a daily chart. So now what I'm going to do is now I'm going to wait. I'm going to go to the lower time frame, and now I'm going to align it. Right? Now I'm going to align it. So first thing I see here, so now I know we may be switching from bullish to bearish. I drew out the daily change in the state, the daily breaker block, right, on the daily. So now I'm going to go down to a lower time frame to try to align it. What I see on the lower time frame, I see actually we got generated lows right here. So this is generated lows, a confluence on why we should go lower. So this could be my draw. Of course, we're going to have a whole bunch of sell side way down there because it's on the daily chart. So now what I want to see it respect this zone. So this is a 15-minute. So I'm looking to see, okay, are we going to inverse one of these zones? So same thing. I'm looking for the same thing. We have a high here, low, higher high. And if we create a lower low here, this is a bearish breaker on the lower time frame, which is a 15-minute. You see what I'm saying? And then I will align the same thing, go right to a 1 minute, and now I'm looking for entry. Which is I'm looking for it to manipulate because I want it to go lower. I want to see it manipulate. I want to see accumulate. I want it doing accumulate. Then I want to see it manipulate up, sweeping out some type of high, and then displacing lower. And that's how I get my plays. And then I will align the midnight open, and then sell side liquidity, London low, London high, all of those into my, you know what I'm saying? So that's how I break it all the way down. You see what I'm saying? But ICT concepts is literally the best. Once you understand it all, and once you have your model, once you have your see, it's about finding your model, finding what works for you and what not don't work for you. The only way to do that is to consistently trade consistently and don't have no days off. Like I don't have days off. Like I just don't trade on Fridays because a lot of reasons, but I don't trade on no news Mondays. And if I do trade on no news Mondays, it's going to be low risk. Like I literally majority trade Tuesday, Wednesday, Thursday. Those are my main days. Monday, I trade Monday if it's news on Mondays. If it's no news on Mondays, I won't trade. I'll just watch it. And if it is no news, I'm only in 1-2 contracts. Damn, it's been fucking 50. It's been 50 minutes. Hey, do anybody got any questions, man? Because I ain't even think I was gonna stay on here for a whole hour. So that's how I trade NQ. So it's a page that's called ICT Gems. Right, it's called ICT Gems on YouTube. Man, type that boy in. Type that boy in. That boy got some sauce. And there's a whole bunch of ICT concepts. He said, thank you for explaining, bro. What do you what you say? Confluences? Then I say consequences wicks were used for. Wicks are gaps. So if you don't know, wicks are gaps, right? ICT use wicks just how he used gaps. So the same way how you would look at a fair value gap, how it reacts to the fair value gap is the same way how you would look for it in the wick, right? You want to see it respect. If you want to see it respect the wick, you want to see it respect same thing, consequent encroachment of the wick, which is mean the 50% range of the wick. And remember, with ICT concepts, all you need is a sweep and 1 or 2 confluences and 1 or 2 yeah, man, that consequent encroachment. So consequent encroachment. So it's so. Let me see what you're trying to say. You said, thank you for explaining, bro. But what about consequent encroachments? What is it used for? So consequent encroachments is just for the wicks. So, perfect example. So let's say I go on a higher time frame because I use it a lot. All right, perfect example. All right, so I'm using market replay. I'm gonna delete right here. So you see how we see this big ass wick right here? All right. I'm gonna show you how I would use this wick. First of all, we have this bullish order block right here. These 2 down close. So we have 2 down close candles and we have an aggressive move up. That's an order block. So I know this is an order block. So once it came into this zone, you see how you can catch your long positions off of this zone. So I'm already thinking this zone is bullish. I'm not expecting it to wick down here. But once I see it wick down here, now I'm like, okay, cool. But look at the bodies, right? First, remember I said, perfect example. This is a PD array. This is an order block. Look how it respected. Remember, in order blocks, equilibrium is called mean threshold. Look how the bodies, look at the bodies. The bodies are in the upper half. All the bodies are here. That's because the wicks is what do the damage, but the bodies tell the story. The bodies is still respecting this order block on this higher time frame, right? So this is how I would use it. I would draw out this wick, and I would extend it. And then I would take plays off of it. So let's say Right there, bomb. It came into it. I will go down to a lower time frame. Remember, I want to see it. Same thing. I want to see it. I don't want to see it come in this lower half of the wick because now it's in the lower half of the wick. That's not bullish. If it come into the lower half of zones, that's not bullish. You want to see it stay in the upper half. So I would use that for a play. So I see we have sell side liquidity here. All this sell side here. So I would want it to sweep if we get it. Let me go a little faster. So let me show you. I would want it to come up. You see how it's generating these lows? I want it to come up, sweep out these lows, right? And then stay in the upper part of that whole higher time frame wick and then create bullish order flow to go up higher. So I will wait for it to sweep out these lows, and then I will go catch a long off of this zone here. So I'm saying, let's see if it give it to us. Damn. Let me go a little fast a bit. Bomb. By there. So look. Bomb. Look right there, right there. Look, you saw how it swept out? So look, it swept out the lows. You see it, right? This is how we use it. It swept out the lows. So I'm gonna delete. And you see how it's still in the upper part. So I'm gonna delete. Remember, I didn't want it to come in this zone down here. So you see how it swept out these lows right here. And then what we got? Bullish order flow. Now I'm looking for bullish order flow. This may be a perfect example. Oh my God, this is a perfect example. Hold on, let me hit the G. Let me hit the joint one more time. Pop break this down. Because this is exactly how I would use it. All right. We went to a higher time frame. We found that big ass wick. We drew the whole wick with a rectangle because wicks are gaps. Right? We saw, remember, the market has to do what? Generate. Remember, that's why you have to piece it all together. The market has to do what? Generate liquidity. The fourth reason why the market moves, it generates liquidity, then it hunts the liquidity, then it rebalances to equilibrium, then it pull back to an inefficiency of a range. So we got, and then it generated everything. It generated these highs. So it generated these highs right here. And these lows right here. Left these intact and it went lower because in order to go higher, it got to go lower. It got to fake you out. So look how it uses the wick. Then it sweeps out the liquidity. And then look what happened. And it stays in the upper part of that zone. And look what happened. We get bullish order flow. This is what I mean by bullish order flow. You want to see bearish fair value gaps get used as an inverse. Look how it closed, rallied, and never even came back. It's leaving bearish fair value gaps along the whole way. And it's not, and because usually you want to see it do what? Come back to fair value gaps, right? But if it's in a hurry, it's going to leave fair value gaps, which is called breakaway gaps, right? This is the inverse. I wouldn't get in here because why? It didn't retest it. So I'm waiting for it. But look what we get. We get a bearish breaker. This is one of my best plays right here. After a sweep, you get a low, high, lower low. Remember, lower low, sweeping out the liquidity. Then we get that higher high right here. Boom. Remember, the last bullish candle. Oh, it did it perfectly. Then this. Hey, I ain't gonna lie. I'm glad you asked me that question because this is a perfect example. Bearish breaker. Look how it closed right here. Look how it came right into it. Boom. Remember, you want to see it stay in the upper half, right? The upper half inefficiency. I mean, a P raise. Look how it's hit. Boom, and it just left it, leaving fair value gaps, showing that it's in a hurry. And one thing I like about the breaker, stop loss always at the low of the breaker. That's why I love ICD concepts. Look at all of these highs you could have been targeting. All right, hold on. Before I do that, look what it did. Look at the inverse. Let's see if it came back to the inverse fair value gap. Oh, to the perfect. Look how it came back to that inverse fair value gap perfectly, coupled with that value imbalance. So you see how it has a value imbalance? You have to put that into you have to draw that with the fair value gap. Look how it came into it perfectly right there. So if you didn't get this entry, you could have caught this one. And then what we get, another breaker. Another low, high, lower low, higher high. Let's draw that one. I probably caught this play. It came back into the bullish breaker. Okay, look, it disrespected it. Let's see respect the inverse. Okay. Gave you some, right? Drop lower, back into the zone. So you see out of here, how much it gave you? It gave you 89 points from here. But you see, it's still generating all these highs. Let's see if it ended up coming back up. But you see how you can use the play off of it. Go a little faster. What time this is? Wow. It's at 12 o'clock. I'm thinking I'm thinking it was 9:30. So 9:30 is where? Right. It's 7 in the morning right now. Wow, I didn't even keep track of the days. No wonder why that play pulled back. No wonder why that goddamn play pulled back. This is like 2 in the morning. So another thing, you want to wait for the right time to trade also, right? Because the plays, so just because you can't use the plays all throughout the day, right? You want to align the time also with the strategies. You see what I'm saying? What about SMT or smart money reversal tool for any yeah, smart money. So SMT is simple. Same thing. That's another entry. We got a low, high. Let's say ES creates a higher, right? Creates a higher low. But then NQ makes a lower low. You want to catch your plays from here. Once you create the SMT, it'll look like this. SMT. I gotta give me some food, but I'm hungry. I'm hungry in the motherfucker. You got the SMT. Now you're just waiting on a inverse fair value gap. Shit, right? I drew the wrong thing. Now you're waiting on the inverse fair value gap coupled with a order block. So this is inverse fair value gap. Once we get above it, I want to see it used as an inverse, and along this zone right here, we should create an order block, and then you use that to go higher. That's a great play also. That's one of my my 2 plays, well, 3 plays. So the reason I'm getting in is the same thing. Whether I'm trying to get in, whether my bias is bullish or bearish. Let's say my bias is bearish. I'm looking for a manipulation higher. Along that road to manipulation higher, we need to be in the premium. Then if we're in the premium, of course, I'm looking to go short. Either I'm looking for a sweep, and then maybe a SMT, inverse value gap, changing the state to the draw liquidity. If I don't get an SMT, I just get in off of a sweep, then it pulls back lower. We get maybe a inverse fair value gap or a change in the state, or maybe a bearish breaker to go lower. You know what I'm saying? So those would be. So that's how I'll be able to piece that together, the SMT with that wick. You got any more questions? But it's really more than just learning the concepts, right? It's really more than just the entry model. It's everything else. You gotta piece everything together. Then you gotta know when to trade, when not to trade. You're only gonna get that with guidance and experience. Yeah, man. Shit. Yeah, man. So basically give you a little quick little one-on-one. But yeah, man, just keep at it, bro. Just keep at it. Keep learning. And then, man, look me up. Ask me questions. Follow me on Instagram at Casino Trades. And then, whatever you need help with, because I trade every day also. So I got a little Discord and stuff like that, But yeah, man. Catch you on the next one, my G.